Oh, look, my baseline scenario is that it's still far too early to call the peak in the dollar, if you like. Look, you only have to look at Powell's comments last week, coming hot off the heels of that late August Jackson Hole appearance. Fed officials, Chair Powell, almost across the board, are talking about quashing inflation with this religious zeal. And look, they could well slow the pace of hikes at next week's meeting down to 50 basis points. And market may well take that as a bit of a signal that the Fed is shifting gears a little bit. But look, the dots, those dots where they signal their profile for rates going forward, they are going to shift up pretty aggressively. And I'd imagine at the same time, Fed Powell, along with other Fed speakers, will make it very clear that what's priced into the market, which is for a progression of easings beginning in mid-23 onwards, is just not simply on the card. In that scenario, I expect the Fed to remain a fairly resilient source of support for the US dollar for some time to come.
What do you make about some of the recent price action? Of course, this time last week, we were talking about the DXY going and hitting at fresh 2-decade highs. It's come off the boil a little bit, but what do you reckon's driven this this reversal of sorts? Is it down to positioning?
Yeah, just to make that very clear, Dave. Look, I'm looking for the US dollar to remain very resilient for many months to come, but it's certainly looking like the conditions are increasingly ripe for a little bit of a US dollar reversal here. And as you rightly point out, the DXY, the dollar index, has pulled back from 110. What's happened in the last several weeks? Well, Euro traded down to parity, and it kind of proved its capabilities there. It never quite broke down in any material fashion below that level. Dollar yen had this steep run up toward 145, and just as we saw late last week, Kuroda, the BOJ governor, they amplified or raised the temperature of their jawboning against the currency at that level. We've also seen a lot of weakness in the Chinese yuan, and in the course of last week, it was running up toward that big 7.0 level, and it kind of stalled there. So markets had, I think, just got a little bit ahead of their skis in pushing a lot of these currencies too far, and suddenly we approach these key technical levels in the euro at parity, dollar yen at 145, and dollar CNY at 7. And so markets are just taking a little bit of a breather here and edging back from these key big round number resistance levels for the time being. I might add too, just very quickly, the ECB's level of hawkishness rose a little bit last week as well when they raised rates by 75 basis points. So there's that in the background as well. And with the market as stretched as it is being long dollars, the US dollar was always vulnerable to a little bit of a pullback.
Yeah, nothing goes in a straight line, of course. Talk to me about tonight's inflation report in the States. There has been so much written about it out there. I think everyone's kind of expecting we'll see the headline rate come off the boil a little bit. But the core reading, what do we make of that? What should we be looking for in the release?
Right, as you rightly point out, David, it's the core number really that the Fed will be looking at. I think everybody, the Fed included, is looking for a softer headline number in the wake of gasoline prices slipping from, in the US, about $5 a gallon down to $4. So that's still washing through the economy, and that'll show up in a softer headline. But it's that core figure which speaks to underlying price pressures that'll be key for the Fed. I think if the number comes in below expectations, maybe 0.2 and possibly even 0.1, I think the market will move pretty decisively to price in a smaller hike from the Fed next week, that is to say a 50. But if it's close to consensus at around 0.3%, if not higher, that the market would move again very decisively to price in or confirm that pricing for a 75 basis point hike next week. I just want to stress, though, that I do think ultimately, whereas the US dollar is looking a little bit vulnerable in the short run here, I do think ultimately the US dollar will get through that FOMC meeting next week somewhat unscathed, even if they hike by only 50 basis points. And I say that because, as I said earlier, the dots are going to move up pretty aggressively. And at the same time, Chair Powell's posture is going to remain very stern, very resolute, even in the face of a slightly smaller increment of hikes. And I think that's going to keep the rate structure or the term structure somewhat elevated and dollar supportive for some time to come.
Yeah, keep at it until the job is done. And at this point in time, it certainly doesn't look like it's reached that point. Rich, to go finish off, you mentioned the Chinese yuan. I want to go and get your views about where it moves in here, because we know the influence it has over a lot of Asia FX, including the Aussie dollar sometimes. What do you make about where it goes over the medium term?
Well, for the time being, the Chinese economy it's not quite rebounding the way the authorities had hoped. We have these periodic COVID outbreaks, mass testing and lockdowns. And at the same time, policymakers are providing some stimulus, but it's not yet washing through the economy in ways that are materially delivering that support. So against that backdrop, the economy needs a weaker currency. And so I think the move that we've seen up towards 7.0 made a heck of a lot of sense. Right here and now, it's probably a little bit overdone. And by the way, I should add too that inflation in China is somewhat well contained. So policymakers there have that breathing room to encourage, if you like, or shepherd through a little bit of a weaker currency without it being problematic to their broader goals. That being said, right here and now, dollar CNY, it's come a long way. It's bumped up against that big 7.0 level. Wouldn't surprise me if we had a bit of a pullback to the mid 690s. But I do think, as I say, with the US dollar likely to be fairly robust and resilient for many months to come, and with Chinese growth momentum not yet rebounding convincingly, I think dollar CNY, dollar CNH are primed to eventually break through 7.0 and trade up to possibly retest those highs from 2018, 2019 at 720. But that's more of a 6 to 12 month view.